Your next guest has probably one of the most amazing stories, not just on Wall Street, but in American business. He built his bond business to be one of the biggest buyers of mortgages before and during the subprime crisis, turning into a family empire. But when subprime crashed, he got crushed, lost almost everything. Then he built it back bigger than ever, and now he's putting some of his fortune to a good use, helping to produce a new movie, a powerful true story about child labor and human trafficking. It's called City of Dreams. It is out in theaters today. John Devaney is the founder of United Capital Markets and the new Manor House Films. John, we got to stop meeting like this, like 15 years ago during subprime. We'll get to the movie in a second. People don't know, you're not a household name, but you are in many ways parts of the mortgage market. You are the guy that makes this market.
Yep. We've
been waiting for this commercial mortgage-backed securities disaster. It hasn't happened, thankfully. But you say things are really, really shaky right now.
Yeah, the CMBS market is actually a disaster right now. That many things are unfolding right now. The bond pricing is telling us that things are very, very bad. Many of the BBB rated bonds and single A rated bonds have fallen to the 50s, 40s, and 30s. The liquidity is absolutely awful. Initially, when COVID hit, the hotels and then the malls were hit because they were closed. Malls had many tenants that went bankrupt. The hotels obviously closed. There were some really big issues. Hotels have recovered. Only about 5 of the hotel SASB deals are really still in trouble. The malls have recovered. I had greatly disagreed with Carl Icahn's bet shorting the CMBX 12 index. He had that bet wrong. Mainly because he didn't anticipate that the malls, when they hit their maturities, wouldn't default like dominoes.
Any sign it's getting better, John? If I have a $500 million indebted San Francisco office building, Class B property, I'm making that up. Is it getting any better for me?
Yeah, so there's the biggest issue in the market right now is office by far. So office has been hit by 2 things. The first is higher interest rates. Just to give an example, a 4 cap rate, which is where many of the offices were appraised 10 years ago, because the 10-year Treasury was at 1%. A 4 cap rate on 20 million of NOI is 500 million. Now the cap rate needs to be about 7%. Okay, that's like 285 million. That's down 43%. So even the absolute cream of the crop, Class A buildings, okay, they're down 35% in value right there. That's not talking about work at home. So there's a slow-moving train wreck happening around America because of work at home. The leases are 10 years. Every year, more and more companies are figuring they don't need as much space. They're giving space back. That's causing occupancy to go down. Then compounding the problem is the fact that we've got about 10 cities in America that are in real trouble. There's crime, there's drugs, there's homelessness, there's bad politics and policies. I mean, your example with San Francisco, the city is just in a death spiral right now. And so
good morning to you too, John.
There are dozens and dozens of office buildings that are defaulting now in Chicago, Denver, Los Angeles, San Francisco. Philadelphia is in absolute such trouble. It could be half the market. That there's no lending in office right now, that because cap rates went up and the cities I just mentioned are in such trouble that like half of all the collateral is worth quite a bit less than the mortgage values right now. There might need to be a bailout by the government or something to help out some of these cities, but there's real trouble. It's going to wipe out lots and lots of tranches of these bonds.
Where do the losses sit, and can Fed rate cuts kind of mitigate any of this as it unfolds?
The fears about the regional banks are very founded. They had 1/3 of all the lending, and they're in deep, deep trouble right now. So all the fears of the regional banks, they have 1/3 of all the lending in commercial real estate. They're in serious, serious trouble if they have exposure mainly to the office loans. Then the office loans live inside these conduit CMBS deals. And so in those deals, the office could be 20%, sometimes it's 50%. So the deals that have more office in the conduit deals, the G is going to get wiped out, the F, the E, a lot of the Ds. So like we own some D classes, that's 4 down from the top. We have bonds right now that only have 2% delinquent. That means everybody's paying right now. Okay, that's very clean. And we're offering them at 45 cents on the dollar. 2% delinquency, 45. That means things are in trouble. The ones that are delinquent, we offer those at 20 and 30.
So then how are you positioned, broadly speaking? Are you net short CMBS right now, given this?
I wish we did very well when I started focusing on CMBS in 2020, 21, and 22. We have a bit of an advantage because we're a dealer in between all these clients. So every 2 points we make per billion, we make 20 million bucks. And so we did real well. We got caught holding some of this stuff too, like everybody else, and we're not hedged. And some of our stuff went down in 23, and we broke even. But it was a really rough ride in 23, and now part of this year as well.
You're a really rich guy, and you had a ton of stuff. You lost almost everything. You've built it all back. It's a very serious topic too. You're co-producing a movie. It's out today. It's called City of Dreams. It is about child labor and human trafficking. It's based on a true story. The New York Times, by the way, has been doing a great job on this. Here's a New York Times recent headline. Alone and exploited, migrant children work brutal jobs across America. When you started to dive into this topic, because people said, John, could maybe you help us fund the movie? It is shocking how big of a problem child labor is, and nobody seems to be paying attention.
Brian, that's exactly right. And some people say, oh, John got into the movie business. It's another business that's real risky. Maybe he's going to crack this one or whatever. You know what? The truth is, okay, is that I saw City of Dreams, okay? And I cried. And I don't cry in movies. And I had tears dripping on my chin. And I talked to the director and the writer, Mohit, until 2 in the morning. And I was so moved by the issue of child trafficking that by the next day at 9 in the morning, I said, I'm going to give you the money. It more than doubled the budget, and I knew that what I was doing was the right thing. And it was going to take this movie from 75 or 100 screens up to well over 1,000 and amplify this very, very important topic to the whole world. And my family, my kids, and my wife, I mean, we feel incredible about this. And now we've decided that trying to bring films that matter could be something that the world needs.